I will try to share with you some background on what we have done at AP4 or did at AP4 to mitigate the risk of climate change and why we got where we are today, and also share with you some thoughts on how to actually find the capital needed. We know that UN is saying that we need to invest roughly $14 trillion for 25 years per annum if we're going to do the transition from where we are today to where we want to be in 2050. So it's quite a challenge. However, I think the possibilities have never been better than they are today. I think there's a huge pool of capital, and we know that there are investments. We just need to connect the dots, and we need to find incentives to make it happen. So short on AP4, it's one of the 4 public pension funds in Sweden. Some 40 billion US under management, a return target of 4.5% long term. And interestingly enough, we have a mandate according to the law. We're supposed to invest on a 30 to 40 year horizon. And that might sound a bit odd, I'll come back to that. This is the DNA of AP4. Our investment beliefs is based on these 4 pillars. Number 1, the long-term mandate. And why do you have a horizon of 40 years, one can ask. And the reason is we're supposed to be neutral in between generations. If it was my capital, I wouldn't mind taking down the financial risk, but I'm sure that my kids of 27 and 25 would like to use the risk mandate to make sure that they got as much money as possible 40 years from now. So the long-term approach also leads us into sustainability. My strong view is that you cannot be successful long-term unless you have sustainability high on the agenda. And I will try to prove that there is no conflict between sustainability and good returns. It's rather the other way around. Thirdly, at AP4 we say that we go for individuals rather than models. We have never, during my years at AP4, allocated capital to asset classes. We're trying to find individuals that can actually find good returns. And I think that the only pure diversification you can get is diversifying the decision making. And that's what we've been up to. Fourth and last, we have a commercial approach. We ask what's good for the pensioner, and by doing that, we get good returns at a low cost. I'll come back to that. Then on sustainability. What is sustainability? It's the 3 letters E, S, and G. And I would argue that it always starts with governance, because governance is the toolbox you can use when you want to address the E and the S. So start off by making sure you've got the right toolbox if you want to address E and S. And now on E, environment, we know that by law, again, the APs are supposed to take environmental issues into account without giving up returns. I thought that was impossible when I came to AP4 some 10 years ago. I've definitely changed my mind. And one can ask, is climate change a risk that we as investors or a pension fund should try to mitigate? And I would say yes. What is a risk? Risk, according to academics and theory, it's usually based on volatility. And I would say volatility is a very poor measure for risk. It will not kill you. However, real risk to me is the risk of a permanent capital loss. And that's something completely different. And then I believe that climate change is representing a risk that could lead to permanent capital losses. And my journey to addressing climate change is all about individuals. I saw the movie The Inconvenient Truth when it was launched in Sweden some 8 years ago. And Al Gore came here, and I was at the dinner, and I left the dinner and I said, there's something going on out there that's probably not good. But that was nothing that I could put on my agenda as the head of a pension fund, because this was purely for politicians to deal with. Then I went to a conference at Columbia in New York, where I met Patrick and Frederick, and they'd written a paper on the need for long-term investors like pension funds to actually act like long-term investors. And that meant that you should deal with actually climate change, you should deal with governance, and you should play a role as an owner rather than investor. Last but not least, I've had a mentor for 30 years, Lasse Sommerfalvin, a very successful investor. who, after giving up his career as an investor, started to study global catastrophic risks. So when we met 3 or 4 times a year, he started in 2010 to ask me whether climate change represented a risk for a pension fund, or how I defined risk. And he kept on sending me articles, books, and kept on asking. So finally, he got me to understand that climate change is definitely a risk that needs to be mitigated. And he gave me this example. According to IPCC, if we're on the move to the 2-degree world, we still have a 1.6% chance of coming to plus 6 degrees. And we all know plus 6 degrees is a total disaster. We cannot live on Earth or a planet like that. And 1.6% on the other hand might not sound a lot, but let's do the parallel to airlines. If 1.6% of every flight taking off were to crash, it meant that 1,300 planes a day would go down. And I'm sure that nobody here would take the flight back to Stockholm or wherever you come from. So my conclusion is that we're willing to take risk on climate that we never ever would have done as individuals. So definitely climate change is a risk, and it could lead to permanent capital losses. And then the question is, how can you deal with this as a long-term investor? And instead of inventing the wheel, I went out and I met over 6 months back in 2010, 2011, 10 of the world's 20 largest pension funds, and I asked them about risk, and they were all telling me the risk was all related to volatility. And then I asked them, what's your exposure to climate change? Total silence. None of the 10 pension funds had a clue about their exposure to climate change. Neither did they have a strategy on how to mitigate and how to deal with it. So instead of me trying to copy what's already been done, that I needed to go back to the office in Stockholm and try to find a way to deal with this. So I went to the global equity team, and the guy running that thought that mitigating climate change again was not his topic. So he gave this mandate or mission to a young, bright guy, and he came to me after 6 months and said, the only way to do it, Mats, is to sell out the fossil. But the problem is, if you sell out of fossil, you have a bet on one sector, and I knew at that time that the board would never give me that mandate. So I said, you need to rethink and come back with a better idea. And it took him another 6 months, and he came back, and he had the idea that we should take S&P 500, more or less the 500 large companies in US. We should do the carbon footprint for the 500 companies, and then take out the worst polluters, the 150 worst polluters. We do that on a sector-neutral basis, i.e. we took out the worst bank, the worst pharmaceutical company, the worst car maker, etc. And by doing that, we actually took down the carbon footprint by 50%, but we had a tracking error of 0.7, 0.8, i.e. we get the same underlying returns as it would have owned the 500 companies. So to conclude, I had to find a free option that carbon is mispriced, and that is still my strong view. Within 10 years we will have a tax on carbon. Believe me, it's the only way forward, and to make sure that we actually pay for what we pollute today. So I went to the board and I said, could we do this? And they had all the usual questions. Could I guarantee? What if I was wrong? Would I tell the press? Blah, 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 blah. But finally they gave me the mandate, so we invested 200 million. Then I went out to my 10 pension funds again and said, do you want to invest alongside us in this fund? And they said, no, you need to prove that it's actually working. A year later, the strategy had outperformed the underlying index by 100 basis points. So I went out again, and they said, well, 1 year is too short time, so no capital that time either. So I went back to the board, and I got a mandate to actually implement this strategy on a global basis in our global equity portfolio. And interestingly enough, after 4 years, we've had an outperformance of this strategy by 200 basis points. So we've actually been able to prove, in my view, that there is no conflict, and if you can deal, and if you deal with sustainability, be that either of the G, E, or S. If you do it in a clever way, you can actually increase your returns and you can lower your risk, and that's what it's all about. So encouraged by this, we were asked at the climate meeting in New York 2014, when Ban Ki-moon wanted hard targets ahead of the climate meeting in Paris in 2015. So we were encouraged to try to find a coalition or form a coalition or found a coalition where we get the doers. So it was us, CDP, Unify, and Amundi that actually founded this coalition. And what we did was to try to find the doers, not only the pension funds that realize that it's a risk, but willing to actually take action. And we stood in the General Assembly in UN in 2014 in September and promised Ban Ki-moon that he should get 100 billion US of pension capital earmarked to deal with climate change. And interestingly enough, 1 year later at the climate meeting, we were able to deliver 26 members controlling 3.2 trillion US and 600 billion of capital earmarked to mitigate climate change and do that in a transparent way where you can report back, where you can measure and actually be the good example. But we are agnostic again about how you do it. You can divest, you can engage, you can do the low carbon indices, you can invest in renewables, but do something, realize it's a risk. So again, in my view, sustainability is all about driving returns and lowering risk, and that is important. If you want to be serious on sustainability, we need to get the right incentives, and the right incentives must be based on economics, and if they are, the capital will actually move in that direction, believe me. Then I'm using the questions that Al Gore is always putting on climate when I'm out talking about it. What if 30 or 40 years from now we're heading to the globe of plus 6 degrees? What would we tell our kids and grandkids? Were we aware of it? Did we do anything? Did we have a mandate? And I think we all have a mandate, and I think that we need to reconsider those questions. So finally, I think not renewable. Then a few words on green bonds. As you know, I've been asked to head the inquiry in Sweden on how to promote green bonds. I think green bonds so far has played a big role. It's been an extreme growth in the market, but unfortunately it's still a niche product. It's less than 1% of all bonds out there are green bonds or classified as green bonds. And if you want to find a way to finance what is needed for the transition, we need to go from the small pond to the big pond. And if that's going to happen, we need to have clearer links between the investments and what they will bring in terms of lower risk or better returns. So you need to, in a stronger, my view, match or link the bond with some security and make sure that actually holding a green bond means that you have a lower risk or you have a better return. Hopefully we will in the inquiry by mid-December this year be able to deliver a report where we have implementable ideas on how to make green bonds become not a niche product but a way forward to finance the transition that is needed in the society. I think I've stopped there and open up for questions. Be more innovative than been so far in actually finding the capital is there, believe me. I mean, just the coalition that I'm representing has some 3.2 trillion US, and a lot of that capital is actually, as we speak, returning nothing. And that capital really would like to find ways. So again, you need to find, you need to make your projects bankable. And I think I said initially that according to UN, you need some 14 trillion US every year for 25 years to do transition. I've asked UN, can you give me the list of the 10 most needed investments to do? I haven't got a list. I've asked EU, I haven't got a list. Mr. Sweden, Per Bolund, where's the list of the 10 most important investments that you need to do in Sweden to actually fulfill the climate agreement that Sweden signed? There is none.